Good morning and welcome to this Wednesday, June 14th, 2023 edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. There we go. Good morning, everybody. Let me see if I can get this camera just lined up a little bit better here. All right. There we go. Actually, I've got two computers here and the camera's coming in on another computer. Not quite sure why that happened, but anyway, wanted to go through and go over a lot of the things that's happened so far this week. We had a big CPI report out yesterday. It was pretty tame. The headline number came in a little bit less than expected, which was good. But we also had the core number that came in as expected. And then this morning, we just got the PPI a little bit ago. And let me see if I can give you those numbers. The May PPI, the actual number came in at minus 0.3%. And the estimate was minus 0.1%. So the number came in lower than expected, which is good. The May core PPI came in as expected. So same as the core CPI yesterday. No change in terms of the core number. Now, of course, today later, we're going to have 2 o'clock FOMC announcement. That's where we're going to hear from the Fed. They'll be telling us, okay, what's going on in terms of interest rates. Most folks expect them to pause. But there's a lot of folks, probably the majority, that believe they're going to raise again next month. So I don't know what kind of language they're going to come out with today, but I think that's going to be the key. I think if they surprise with a rate hike, that could be a problem for the market. But otherwise, I would be, looking for maybe flat or maybe not really doing a whole lot until the 2 o'clock announcement. And then all bets are off. Trying to decide what's going to happen after a Fed meeting, that'll drive you crazy. And so I don't even think about it. I like to see where we finish the day. But from 2 o'clock to 4 o'clock, I expect things to be pretty wild and would not be surprised if we see some very, very interesting action, volatile action. So keep all that in mind. Let's go ahead and go over some of the charts. I'll start off with what happened yesterday. So just give me 1 second here. All right, you should have my screen up now. The Dow Jones Industrial Average yesterday up 145 points. S&P 500 up 30. NASDAQ up 116. Mid caps up 28. Small caps up 11. On a percentage basis, mid caps had the best performance, up a little bit more than 1%. Small caps were up almost 1%. Then we had the NASDAQ up about 0.8%. S&P 0.7%. And the Dow was up about 0.4%, just a little bit over that. Dow Transports, though, over here on the far right, upper right, you can see moving up again yesterday about 1%. 14,500 is a big level. We closed at 14,448. I think we're going to break out here on the transports. And that is a really good sign because I've shown charts in the past when the transportation index is rising. Not whether it's leading. It doesn't have to be a relative leader. When it is rising, significant odds are on the side of the S&P 500 also rising. Normally, the transports, if you think about it, a lot of folks say the S&P 500 or the stock market is the best leading economic indicator. So if the S&P 500 or the overall market, the Dow, the NASDAQ, and so forth, if they're the best economic or best leading economic indicator, then it makes sense that they would go up with transports because transports are exactly that. Transports will tell you exactly what the stock market believes about our economic condition going forward. If we believe the economic conditions are going to be strong, you're going to see a strengthening transportation group. So I think it's important that we're seeing transports rising here over the last maybe 2-3 weeks. And a breakout above 14.5 would be a very good indication. It would just be one more bullish sign that we've been talking about now for a year. It's all come to fruition. Market now is moving higher. And the thing that really kind of makes me chuckle is that now we're starting to get a lot of analysts saying, you know what? I think this could be a new bull market. Well, it's better late than never. But like I said back in June, folks were like, why would you try to pick a bottom? Why do you want to try to go against the market? What's the benefit? Well, the benefit is that the first year after a market bottom is normally the best move to the upside. Now, let me qualify that for a second, because June didn't turn out to be the bottom. We actually went just slightly lower at the beginning of October. So really our year is counting from the October low. But over the course of last year, I'll show you some numbers in just a minute. It's pretty amazing how much many of the sectors have risen here just over the past 1 year. But let's move on and look at those sectors for a second. Materials yesterday, big move up. We went up through the moving averages, went back, tested that 20-day moving average, and blast off to the upside. Really good action there. Materials gained 2.3% yesterday. Industrials, I can tell you that the all-time high on industrials, the XLI, is right around 105. We have made a move up from 97 to 104.33 this month alone. So it's been a really rapid rise in industrials, led a lot by those transport stocks, but the industrials on the verge of moving to an all-time high. I think that's a really important chart to continue to watch. Why are the industrials breaking out to an all-time high? I mean, folks are saying, things are bad and we're going to have a recession and all this. Well, transports seem to be okay with it. Industrials seem to be okay with it. Discretionary, making a big move up here over the course of the last 2 to 3 weeks, catching up with technology and with communication services. Those are the three aggressive groups, and they are absolutely flying to the upside, especially discretionary. And when you look at what's going on with discretionary versus staples, it's night and day. So the discretionary group of consumer stocks just significantly crushing the staples area, which is really important. Looking at individual stocks. So Caterpillar, a big winner yesterday in the industrial space. You can see gaining more than 3%. That actually helped the Dow Jones. That's one of the 30 Dow components. So that was a big lift there. It is moving up into an area around 255 to 260, where it may see a little bit more resistance, but for now, straight up move. Steel Dynamics, materials, as I mentioned over here, bouncing back, jumping higher. One of the reasons, at least from an individual stock basis, was Steel Dynamics. Steel Dynamics clearing its 20 and 50-day moving average, much like the XLB. We moved up, hit the 50, came back down, tested the 20, and then blast off. Watch overhead resistance between 110 and 115. If we clear that, I think Steel Dynamics has an open lane to move back up close to that March high. And then finally, we've been talking about a lot of these cruise lines. First, it was Royal Caribbean. Then yesterday it was Carnival. Well, today it's Norwegian. Norwegian makes a big move, up almost 6% yesterday. Very strong move, trending above both its moving averages. That PPO line looks great. And look at the AD line. Whoop, sorry about that. Look at the AD line moving higher. So things looking pretty good here on Norwegian. All right, let's keep moving. 10-year Treasury yield. So this morning I mentioned the PPI coming in a little bit better than expected on the headline news, but as expected on the core. 10-year Treasury right now, let's get an update here. Make sure I got the latest. It is down 5 basis points back to 3.79%. What's going to happen at 2 o'clock? I don't know. We could see more of the same, more of this sideways action that we've seen over the past couple of weeks. We could see a resumption and move back up maybe to test that 405, maybe even 410 area. And then ultimately, and from October, 4.33, I think was the high. Or do we move the opposite direction? Does the Fed give the bond market something to chew on where everybody wants to jump into bonds, sending yields lower? Could we be moving back toward that 330, 340 level? Honestly, I don't know. I think we're in a wide range. I think we could go either way. The market doesn't seem to be fazed by the fact that interest rates have been moving up. That's different than what we saw in 2022, right? Every time we saw rates going up, the market struggled. And then when rates would come down, that's when we would see a little bit better performance, especially in those large cap growth names. One thing I do like is that as we've been going higher here in the 10-year Treasury yield, we are starting to see a little bit of strength down here in the industrials relative to the S&P 500. That's the normal. Now, what's going to happen today? What if yields go shooting higher? Will that lead to a big move into the industrials and a breakout? Something to think about. What about if yields drop? Is that going to squelch the industrials right at that 105 level? Don't know. We're going to find out together. Going to be a crazy day. Trying to predict the market. I've got a lot of signals that I use when I'm just trying to call the market, short, well, maybe intermediate term to long term. But short term, I find much more difficult. I do have a couple of go-tos. Normally, it's the 5-day moving average of the equity only put call ratio. And right now, if anything, that's telling me that the stock market could be in like a topping phase, but we just keep powering forward. We've got Max Pain options expiration this Friday. We had a session on Monday night talking about how much in the money call premium is out there right now, and the fact this could slow down the market. What's happening? Market just keeps going higher. Let's take a look at that S&P 500. You can see the breakout above 4,300. Remember, that was a big, big level. We're going into option expiration week. We got the 5-day moving average of the equity only put call ratio, which was down quite a bit, signaling perhaps a market top. And look what's happened the last 2 days. This is, to me, I'm not going to say typical behavior, but it is behavior that you have to be aware of in a bull market advance. Bull markets take no prisoners. You think that they're going to top, and they just keep on going. And you think, okay, it's way overbought, can't possibly go any higher. And it just keeps going. I think, as I mentioned on Monday, I think the safer way to play the market right now is probably with the small caps, because you've gotten a recent breakout there and you don't have nearly as much in the money call premium. So with that, I feel like it's a less risky trade. So I've been dabbling yesterday with the IWM, the TNA a little bit, which is the triple on the IWM. I'm going to have a very tight leash though. In fact, I might even get out of the leverage before the 2 o'clock announcement comes out today, simply because I don't know which way it's going to go. And sometimes the moves can be dramatic. I'm okay holding on to the IWM. I just think the leveraged ETF is a little crazy because we're probably going to get whipsawed. We're probably going to see some big moves after 2 o'clock, some to the upside, some to the downside. And I don't know which one's going to stick. So leverage probably won't be in my portfolio come 2 o'clock today. But I do like the IWM. I do like the industrials. If we get through this 105 level on the industrials, I'll certainly maintain a position there. I think some of the transport stocks, if you like individual stocks, I think this is a group that's been performing really well. And if we happen to see that breakout on the transportation index above that 14.5 level I was showing you earlier, we can go back over here. So right here, we get that breakout above 14.5. That's going to be a really important area in the market. So the S&P 500 is one index that's made the breakout. We do have room now. Now we've got price support at 43.05. That broken price resistance at 43.05 now becomes your initial support. And then you've also got the rising 20-day moving average, which is approaching 42.50. Clearly almost right on that gap support level, right at about 42.40. So those are just a couple areas to the downside that maybe you could be thinking about. I wanted to also show you, before we show the NASDAQ 100, the semiconductors, because we broke out again yesterday. The good news is we broke out, that PPO starting to turn back up again, and it looks like we're going straight to the moon, and maybe we will. But I do want to point out, let's go, actually, I'll go 3 years on this chart. I want to show you this overhead resistance at 97.50 from November 2021, and then right around 9,700 at the end of December 2021. And look at where we are right now. Yesterday, we got as high as 96.97. So if you're looking at a 1-year chart, it looks like the sky's the limit. But if you got you look a little bit more at the longer term, look back a couple of years and you look back to those all-time highs, you can see we're right up against it. Also, check out the PPO. And as high as we've gotten, this is the highest we've been in the last 2 years. Actually, even 3 years. I'm going to go back. Let's go back throughout the entire bull market. You can see right now we got up over 5. If you look back, we've had some big runs in semiconductors, right? We have never gone over 5 on the PPO, never on the daily PPO in the last 10 years since this since this secular bull market started in 2013. We have never once seen that PPO go above 5. So we've got some incredible momentum to the upside, but look at the chart now. And what's interesting is this is essentially what I was looking for back at the beginning of 2022. I thought we could see a V bottom in the overall market. Now we haven't. It's taken a little bit longer for everything else to catch up. But if those of you that were with us on January 7th, I think, or maybe it was January 8th, 2022, when we did Market Vision 2022, if you looked at the chart that I drew of the S&P 500, it was like this, down, back up. The only difference was I thought that we would bottom in June, and then we would be back up by the beginning of this year, first quarter of 2023. That was kind of my initial target. And then, of course, welcome to the Fed Chief Powell's world of stock market forecasting. I say that with a lot of sarcasm. Not a big fan of the Fed talking about what stock prices should do. If you think back to Greenspan, the irrational exuberance, that was his talk back in 1996. And then we saw for the next 3 to 4 years, one of the biggest bull market runs ever after he said that. So I pay no attention. The Fed's job is not to call the direction of the stock market. I'm pretty sure that's not their mandate. So I kind of, on the one hand, chuckle a little bit when they try to be a stock market prognosticator. This definitely shook the market up for a couple of months. I think that's the reason why we saw semiconductors and the overall market go back down and print a new low in October. But did he get it right? Well, if you want to call 2 months of moving lower, getting it right, then I guess he got it right. Otherwise, all it was a temporary blip before the overall bull market kicked in. And now we see why a year ago I was bullish, why I turned bullish in June of last year. So that's a lead in for the NASDAQ 100, because the NASDAQ 100 is looking like the semiconductors moving up. Seems like a pretty good rise. It looks like maybe we're going to continue to move higher. We go back 3 years, though, we still got a lot of overhead resistance. And the reason the NASDAQ's not up there is the NASDAQ's not totally made up of semiconductors. We have other areas in there that simply haven't been as strong as semiconductors. So I'm looking overhead at this double top at about 15.2, 15.250. We closed yesterday at 14,900, so we're getting there. We got the semiconductors right at that 9,700 level. Does that group break out? I mean, that would be so bullish in my view. If we get semiconductors breaking out to all-time highs, we get industrials breaking out to all-time highs. I think technology, we pull up the XLK, getting very close to all-time highs. You can look at individual stocks, some key stocks. Apple, now at an all-time high. NVIDIA, now at an all-time high. Microsoft, right up against all-time highs. I mean, anybody who's clinging to the bear market side right now, I don't understand what the heck they're looking at. What I said many months ago, when we first started to break out above key moving averages, was even if you're bearish, respect the uptrend until there's no uptrend. That would have saved you a lot of pain of being on the short side. I mean, as long as the market keeps trending higher, why do you want to try to short? Makes no sense to me. Anyhow, I think the bull market continues. Short term, I'll tell you, at the beginning of the week, I said this could be a danger week, and I don't believe we're out of the woods yet. I still think we've got another week of time where this market could take a big move to the downside. And I say that because of options. I mean, there's so much in the money call premium right now. All right. Anyway, let's keep moving. Chart of the day. So if you're a fan of the chart of the day, if you like, going through, seeing one chart that kind of stands out that I'm looking at, You might really like our Earnings Beats Digest, which is our free newsletter that goes out Monday, Wednesday, Friday. It's basically a chart of the day on Mondays, Wednesdays, and Fridays. Put in your name, email address there, and get yourself all set up. Normally is out by about 8:30. Very quick read, couple paragraphs and a chart, and you don't need a credit card. So you can simply put in your name, email address, hit that subscribe button, and we'll make sure that we get you set up. And obviously won't be charged, and you can unsubscribe at any time. If you'd like to check out our paid service, and I can tell you that we got a lot of happy members right now because of the calls that we made, the guidance that we provided really for the last three and a half years since the beginning of the pandemic, all the way through the pandemic. It was back, I think it was right in the middle of March 13th, March 15th, 2020, where I said, we're still in a secular bull market. People thought I was crazy. We went down for 3 or 4 weeks and right back up, right back to new all-time highs. I said the same thing going into 2022, that it could morph into a cyclical bear market, but it was not going to be secular. It was going to be a short term, and we were going to go back to all-time highs. We're well on our way. Some stocks, some indexes, some industry groups already there. The rest will follow. Anyway, if you want to get that guidance, start your no-cost trial. It's a free 30-day trial. Why wouldn't you? Seriously. Anyway, check it out. We'd love to have you. And hey, our service isn't for everyone. We do a ton of research. The reason I'm not doing more of these shows, I already do a lot of them. The reason I don't do more of them is I'm busy. I do a lot of research, and I try to make it independent, proprietary research that nobody else has, things that I think are important. And that's how I'm able to make calls that maybe some others don't make, at least ahead of time. But check that out. We'd love to have you over at Earnings Beats. I think you'll really enjoy the service. All right, let's move on. So the chart of the day for today is AMD. I saw it was up in pre-market. Actually, we'll come back to this. Let's see what's going on with AMD in pre-market. Up $3, 127.61. But if you look at the chart, that's a bearish engulfing candle. We've got a negative divergence. And I calculate max pain to be almost down to 50-day moving average, down in the low 100s. Now, I'm not saying we're going to go down to 100, but we do have a negative divergence, which tends to, I always look for PPO centerline test, and I look for 50-day test. That's what I look for after a negative divergence prints. I don't know if we're going to get it. I certainly don't know if it's going to happen this week or early next week, but there's a lot of risk being in AMD for a number of reasons. Options expiration week, that's certainly number one. Got a lot of in-the-money call premium. I think market makers could make a lot of money as of the close on Monday. We had over $1 billion of net in the money call premium on just AMD. One stock. So much in the money call premium out there. Now, if we keep going higher, market makers don't lose money. I always try to stress that. There's no guarantee we're going to go lower. It's not like if we keep going higher, market makers are going to lose a bunch of money. They're not. They're not out the $1 billion right now on AMD. If they were smart, I'm sure they are, they were hedging. So when somebody buys calls and you sell those calls, best thing to do is turn around and buy the underlying stock. And by doing that, you can protect yourself against upside moves. But what if you buy the stock and then at some point we reach a level where you're like, you know what? Demand is starting to wane, and I'm going to go ahead and start selling some of these long positions. And then other technical traders start to sell. And then after you get out of your position, market makers, why don't you just short on top of it? So you win on your long positions, you win on your short positions, and then you start to cut into that in the money call premium that you have to pay out. It's a win-win-win. I call it legalized thievery. That's why I always pay attention to what's going on around options expiration Friday. Anyhow, that was a big reversing candle that we need to pay attention to. Unless we can take out the high from yesterday on the AMD, I would be, I'm not shorting this market, but if you're okay with shorting in an uptrend, I'd be shorting AMD at the open today with, a stop up above yesterday's high. I believe it's going lower, but when I say that, I believe the odds favor AMD going lower. I don't know for sure that AMD is going lower. All right. All right. So a year ago, we got about 5 minutes to go here before the market opens. But some of you will remember this 1 year ago. There's the video. I'm calling the bottom in the S&P 500. Look at the date, 6/16/22. It's 6/14/23. We're almost a year in. The reason I bring this up is if you look at the sector summary and we go back 1 year, I want you to look at what's happened to the sectors over this past year. We've got technology up 38%, discretionary 21%, industrials 20%, communication services 20%, healthcare 10%. There's financials 8%. Financials another one of the aggressive groups. 5 of the top 6 spots are all aggressive groups since June of last year. That's where we've seen the money rotate to. Look down at the bottom. We've got consumer staples, utilities, and real estate, and then the 2 neutral groups, materials and energy. So if you could just rewind and just go back to 1 year ago today, when the signals were already saying, and part of the reason that I talked about the stock market bottoming back then, if you recall, was money was rotating under the surface into more aggressive areas. So while the S&P 500 was setting new lows, technology, consumer discretionary, communication services, growth-oriented stocks in general were all being rotated into while the market was going lower. And I said at the time, go back and listen to the video. I said, money is rotating. Wall Street firms are rotating into critical areas, critical aggressive areas. While everybody else expect the market to keep going down, I was like, this isn't how Wall Street works. Wall Street doesn't jump into technology right before we take another big leg to the downside. It just doesn't happen. What happened at the end of 2021? Do you remember what happened? I wrote an article at the very beginning of 2022. It was over in my Trading Places blog, I believe. Might have been in Chart Watchers. But my argument then was consumer staples and the 4 defensive groups led the S&P in December of 2021. The aggressive groups, money was rotating out. That was one signal. Now, I had a lot of other signals, negative divergences, ridiculous amounts of bullish sentiment. I mean, that was my number one indicator. Sentiment was just out of hand. That was back in the day when the meme traders, you go to Wall Street Bets and somebody says, hey, buy plug. And everybody goes and buys plug and plug goes up $5. That was ATM machine kind of bull market where anybody could come in and literally just print into the ATM machine how much money they wanted and they would just make it. That usually doesn't end well, and it didn't. But that was the rotation we saw going into 2022, away from bullish stock, away from aggressive stocks. In June, it started turning the other way. And now you can see the result 1 year later. Why were the big Wall Street firms getting into technology? Well, maybe it was because over the next year, it was going to go up 38%. Probably be a good reason. Nobody else wanted technology a year ago. I can promise you that. Other than Wall Street firms, earnings beats, and maybe a couple of others, but not many. Everybody thought this market was doomed. Anyway, look, this is the 1 year. Now I'm going to show you year to date. Technology, communication services, consumer discretionary, industrials. How about 3 months? Technology, communication services, consumer discretionary, industrials, financials. Over the last 3 months, there's your 5 aggressive groups all at the top. Over the last month, technology, consumer discretionary, communication services, industrials, financials. Again, the 5 aggressive groups all at the top. 1 week, there's consumer discretionary, industrials, technology. 3 of the 5 over the last week. And this is with Max Payne facing us, still leading the market. I mean, it's been incredible. And then we go just yesterday and look at industrials, consumer discretionary, even technology. 3 of the top 5, even though the market is set up for these stocks to go down, and they keep going up. I don't know. I just don't know how anybody can look at what's going on in the market and the groups that are getting the money, the rotation. I don't know how you can look at this and say, oh, we're going a lot lower. because apparently nobody gave Wall Street firms the memo. All right. I wanted to take a quick look. It is 9:30. Industrials on a relative basis have been going down this year. But look at their chart down here on an absolute basis. We're right at all-time high territory on the XLI. So when you're looking at relative strength, and the reason the relative strength is down is because technology has been so strong. I mean, when you've got the number one market cap weighted sector that's leading the S&P 500 by a mile, it takes away from the relative strength of the other 10 sectors, even if they're fairly strong. And so the overwhelming strength in technology is what's causing the relative strength in industrials to go down. There's nothing wrong with the chart. And in fact, we could get an all-time high today. So anyway, keep all that in mind. I really like the group. And let's see how the market is open, because it's 9:31. We're going to go ahead and wrap up. So we got the Dow Jones, which is down 154, NASDAQ down 12. Small caps, though, clinging to a small gain to open this morning, up 0.14% on the S&P 600 small cap. S&P 400 mid cap up 0.22%. Down here, the VIX moving up just slightly. I would expect us to have a pullback at some point. I mean, I don't know when it's going to happen. I don't know that there's too many folks out there more bullish than me. And even I think the market needs a pullback, a little selling, a little consolidation. But that might be the reason why we don't see it. Anyhow, all right, that's it for me. I appreciate you all tuning in so much. I really appreciate you tuning into the show. Please, if you like the show, hit that like button down below. Also, subscribe to our channel. We really appreciate all the folks coming in from YouTube now that we're doing this live stream. And we'd really love for you to subscribe. It keeps you up to date on any of the things we do. Whenever we do any kind of an event, you'll be the first to know. So we want to make sure that you do hit those buttons and like our video, and then also become a subscriber here at Earnings Beats. All right, appreciate again everybody tuning in. Good luck out there today. Remember, 2 o'clock today. That's the big Fed announcement. After 2 o'clock, anything goes. It'll probably be a bizarro world for a couple hours after that meeting. Have a great day, everybody. Happy trading.